But yesterday was the 18th, and we had 209 million inflows. The day before was the 17th. We had 274, and then now we have 32. So this week we're already at 500 million in inflows. So that's really, really, really good. We are kind of waiting for the final numbers right now, but so far, Grayscale is at 6 million inflows for the day. Grayscale Mini 5 million. Our capital was 0, and Bitwise with 12 million. We are still missing on Fidelity and BlackRock, which is IBIT. Those are usually the biggest and heaviest hitters. So, guys, welcome to the show. Thanks for being here this fine day.
What's up, guys?
All right, so let's let's just jump right into it. Lou Raskin is he is the crypto elite, and he's going to just jump right into it with charts and predictions as to what he thinks is going to happen with the upcoming health of, can we do this, Lou? Let's just do Bitcoin. Let's do Solana, and then we'll continue to laugh and humiliate Ethereum. You can just pull up ETH, BTC, or whatever. It's crazy that I still see people posting Ethereum hopium on like crypto Twitter.
You never know. You never know. Yeah, fingers crossed. Let me see if I could.
You just close the right panel with all your. Yeah, there you go. Perfect.
Maybe I can make it bigger too. Actually, it seems pretty good. Like you could see it. Yeah. Okay. Well, I tried to make it as easy as possible and draw this squiggly line for you guys. But yeah, today was obviously a great day. We closed above the pretty key level of this monthly open back here that we just kept on getting, shot down from multiple times, days in a row. And then finally, today we closed right above it, or not right above, we closed above it, which is bullish. And most likely we'll see a good rally back up to the major resistance of like pretty much, it could honestly go all the way up to 93K, 93.5. But obviously that's where you see the squiggle line turns around right now. And that is going to continue to be, the biggest place of, resistance where you got to just have a lot of caution, because there is this massive support resistance flip that even back here, like during the Trump rally or the Trump, Bitcoin strategic reserve announcement, this is where it got rejected from. And so if you look,
just zoom in on the parts that you're not using, just because as far as the left side of the screen that you're not using, because it's hard for the guys at home to see the price and the there. Perfect. Thank you so much.
I'll make it a little bit bigger. And so pretty much what you want to do typically when looking at the charts is look at the high time frame and then go down. So you start off on the yearly or the monthly, and then you go to the weekly, and then you go to the daily, and then the 12-hour and the 4, and you just narrow it down. And so there are some short-term, like very short-term bull cases that could send us up to $93,000 to $98,000, but still technically we are in a downtrend now. So it's a little bit of a situation where you could aim to try to get in on the shorter term plays, but ultimately if we do come up to this area, then this would be a good area to de-risk and to say like, okay, I will sell up here, and if we happen to come up even higher, or let me zoom in even more, if we happen to come up even higher and then just hold above this area, then you can target much higher. So my personal plan is to sell if we do come up anywhere between 90 and probably all the way up to $96,000, and I will buy back if the price heads up even more and then stays up above here. But it seems like just to have one move down like we had, and then, or I guess maybe you could say this is two moves down because of this giant wick, but really it looks like one move down and then one move back up, and to say, okay, this is going to be it. Like, and now we're just going to go like, straight up from here seems a little bit like possibly jumping the gun, because if you look back here, this is, what happened last time in April of 2024. We came down and we came back up, but we just made a lower high before coming back down and making lower highs and lower lows. But eventually, obviously, we did bust out and come all the way up here. So shorter term, yeah, I like the fact that we have the ETF inflows coming in, and that's super bullish. And obviously, the price is going up. So going back to the daily chart, you can see the price is moving up now, high, low, even higher high, higher low, even higher high. So it's probably going to come down and make a higher low and then, continue that trend, which is great. But I would say, maybe go in, you could possibly go in now and then sell up here in this big resistance area, or you could wait for a little bit more clarity. In the end though, I do think even if we do end up coming up here, getting rejected and falling all the way back down to 75,000 or 74,000, we're going to eventually turn around and then come back up and, make new all-time highs, because I really don't think that this cycle is completely over. And I think that Bitcoin might even be in some other type of cycle now, as opposed to the traditional one, where it's sort of just, instead of having 80% drawdowns and, like 500% or 800%, moves up, it might just be more aligned with the S&P 500. But the thing is, like, I want to get super excited. I know you're pretty excited right now, but I do still see some bearish cases, and that's why before I go all in and like I'm just like super bullish, I want to see what happens up in this area. I wrote some things out too. This is this line up here at 93.5K. That's the yearly open, and it's the quarterly open, and it was a weekly open as well. So it's a pretty big area. It's a really big area is this area. And you see, we got support, and support turns into resistance when it's flipped. So that's why I want to see us come above here before I get super bullish again. And even honestly, even 90,000 or 91,000, anywhere up there, holding above there and like really just like busting through there is gonna all bulls, back on the menu, like it's going up.
91,000 was the previous support. Now that seems to be our resistance. Is that correct?
Yeah, honestly, anywhere from 91 all the way up to 96 and a half, 97 is the big resistance at this point, right? Yeah, and 90,000, I mean, that's where this 2-day chart got capped off and closed up here before falling back down. So yeah, I would say like keep that in mind. Just keep everything in mind. You want to have the liquidity coming in, which is great. You want to hopefully get rate cuts at the next meeting or the meeting after that, and you'll go into more detail on that. But what I'm really looking for, and I wrote all this down, so let me go into my other tab right now, is that there's very little narratives. So we had a lot of bearish stuff on this chart. So if you look back, like this up here, this was a really very bearish looking topping signal, or whatever you want to call it.
What date was that?
This was the actual top of January 20th, 2025.
Okay, inauguration day.
Yeah. So yeah. So if I zoom in a little bit, this is what I call this is what I call a swing failure pattern, where you can see the price, it jumped up And it jumped up above the previous high, which was back here in December 16th. And then it fell back down and it closed back here. So everyone thinks it's going to keep on going higher because it makes a new all-time high, but then it crashes back down. And that, to me, that's like, that's pretty bearish. And then also we have, let me actually, I think I might have put it.
What was that mega candle downwards? That huge, that was the biggest weekly candle down in Bitcoin history. What was that? What was that news there?
This one right here?
Yeah.
Yeah, this was well, I know the week right before. This is a weekly candle, so every single one of these candles represents 1 week in length. And so this, we have, first off, let me just get rid of this, clean things up a little bit. First off, if people remember, we had this huge wick right here on this candle, and this was when the price was looking absolutely terrible. And then Trump came out with the strategic Bitcoin reserve announcement, and also the strategic Bitcoin reserve and the strategic crypto reserve announcement. So 2 separate things, like super bullish as you could get, probably the most bullish thing you could ever ask for. And that shot the price all the way back up during that announcement on the last 3 or 4 hours of the weekly candle, which was, pretty amazing. And then after that, this is the week after the strategic Bitcoin and the strategic crypto reserve were announced. And apparently, that just wasn't enough to hold the price up. So we had massive amounts of selling, which drove the price down, which, like you said, was one of the biggest, not one of the biggest candles in Bitcoin's history as it points to actual price. And since then, we swept these lows. We swept the lows back here and, shot up. That's super bullish. And then this week, we're starting to get the inflows. That's also bullish. And the price is moving up. That's also bullish. So we're getting a lot of short-term, really bullish stuff. But I'm a little cautious for when we get back up to this area, because there was so much support. And like I said, when support breaks, typically it turns into resistance. So anywhere, back up in this area is where I would be looking to maybe offload some positions if I, been holding. And like I said before, also, if it comes up here and holds up here, then, I'll just jump right in and I'll jump back in, and maybe I'll miss out on a little bit of this move, but I don't want to be holding in case it goes all the way back up and then falls all the way back down, but like I said, short term is good. The only thing is, not the only thing, but we are in a downtrend. So high, it basically we're in a downtrend. Like you could easily see that, we're going down, right? And we're turning around. We are turning around now, which is great. But is this going to be just a quick turnaround, or is it going to actually be sustained? And that's what we need to know. So yeah, that's what I'm looking at. That's basically it for Bitcoin. One other thing is that back here, during these lows, people were calling for $20,000, Bitcoin back here, right? And then we just shot all the way up and we made new all-time highs. And so I think that if you want to have like the bull market continue and shoot up to new all-time highs, we almost need to have people really just saying it's completely over. Like, just basically don't even, like it's dead, all that stuff that you hear at the lows, right? So if I start hearing that, I would really be more prone to want to actually buy it. But before that happens, like, I'm just going to be a little bit more cautious, especially when we get back up to those huge support resistance.
Yeah, let's go ahead. If you have can you pull up a chart with no words on it? Because some people are watching on mobile phones, so it's like really hard for them to see that. Let's take a look at the next coin. Let's look at Solana real quick, because there's some good news regarding Solana. James, you clarified something in the chat. It was there is an ETF for Solana futures now, correct?
Yes. Solana futures ETF, not spot ETF, right? So what happened was a few months ago or a few weeks ago, the SEC or the Commodities Commission approved Solana futures trading, right?
Mhm.
So that because of that, that allowed lead into Solana futures ETF, which would possibly lead into Solana spot ETF, which was same type of process that took for BTC and ETH, right? There has to be futures to kind of gauge the volatility of the asset. Then there will be ETF based on those futures. Then there will be allowing the spot ETF, right?
Mhm.
So we are moving in the right direction for Solana, given that, what we've seen on previous BTC and ETH spot ETF process, right? So we're getting closer and closer. Same steps.
Hmm. Good stuff.
Yeah,
Well,
because the futures came out, the futures ETFs came out first for
Yes, sir.
Bitcoin and Ethereum, and then eventually, yeah, we got the spot. If we get spot, it's really so much better than futures, because spot, you just buy it and you can't short it. So that's what we want for pretty much everything. And so speaking of Solana, this is Solana. The first thing is that this big green box right here is a couple things. First off, I love using the Fibonacci. And if you take the Fibonacci from, the start of this entire move all the way back September 11th, 2023, and you just bring it all the way up to where the top was, this is what's known as the golden ratio. It's the 61.8, and that is basically the law of the universe for the Fibonacci. Everything wants to go back to the 61.8 golden ratio and then bounce off from there. And, as you could see, we did bounce off from there, which is really, really, really cool. And not only that, but you had all of this, all this support right here, just bouncing all of 2024, basically bounced off of this big support. And remember how I said support turns into resistance? Well, also resistance turns into support. And that's actually, you could see that right there is the, so this is the big resistance, right? And then we had another resistance right there, and then it turned into support. So now we're back at that huge support, which is really, really, really good. And so you could potentially see the same thing that happened back here with the price just, bouncing back and forth in this range. It was in this range for a really, really, really long time. So who's to say that maybe Solana won't do something on this side? It's a little bit, I mean, honestly, yeah, it totally could. So like I said, for Bitcoin, maybe not maybe, like on the shorter term time frames, yeah, it's looking much more bullish. If it happens to come back up to 160, 170 ish, then I would want to offload some, or maybe even look for shorts. But going down into a lower time frame, you could see that we were just down nonstop, all the way from where the would peak up 262 was the close, and it's been down since January 20th. So yeah, the same day, January 20th is when it peaked, and it's been down only since then. But if you take a look, you could see that this is a very steep drop. And then a nice, wait, where's my thing? There you go. And then another steep drop, and then another steep drop. And now we finally have gone from a sharp move down to a sharp move down to a lesser, or to not even to a lesser of a sharp move down, to finally turning around, and having a move up. So that's what you want to see when things are starting to turn around. So now you could actually start to say, I want to start longing this. I want to start buying this from a technical perspective, because you don't really want to be buying while things are, having these really steep moves down like it had. But as you can see, since it's slowing down, maybe this is just the start of the big U to come back at least come back up to this area up here. So yeah, I think if you're looking to buy it, you're getting some good confirmations, you know, around this week when it comes to not just the price action, you know, creating higher low, but you're also getting the ETF inflows for Bitcoin and I think Ethereum too, and some other, you know, potentially positive things happening. And it's really just if you want to buy now, we're already super, what is it, 60% off the highs, even more than that, we dropped. So yeah, 55%. We're pretty significantly off the highs. If you think that we're going to have a, you know, new all-time highs, or the bull market is still on, which I think that it is. I do think that we will have new all-time highs eventually. I think this year. I think there's just going to be a lot of chop in between that. But if you think that, then it's not a terrible place to, you know, start grabbing some, in my opinion. And then if it does happen to, let's say it does happen to do something similar to Bitcoin, and, you know, it comes up and then gets rejected and falls back down, I think buying anywhere, honestly, anywhere under 100 is just going to be so, you're going to be very happy in whether, you know, 6 months, a year, however long. If it comes down to this area, then this is a absolute like automatic buy, because there's a lot of liquidity down here just waiting. I think that there's a lot of big players, just if it comes down here, that they will want to be buying. And so, yeah, that's pretty much Solana for you right now. It's looking good for the short term. If it comes back up here, I'd start to get a little worried, just because you could see it got rejected from that area so many times in the past, and it's a really big support resistance flip area. It's a big resistance. But also, if it does come back up here and, you know, holds above it, then this right here will be the new range, and you could just play this range. So right now you're playing this range, right? And if it falls under here, then maybe you could target here, or if it comes up here, you could take your profits. And if it comes down here, you could, you know, buy it. But really, it's just
what
about
is that range, just for the people at home that can't really see it?
Oh, sorry. So the range is right now from the 100 and basically 110, $112 up to 170, 165 to 175, let's say. Yeah. So 115 to 175, you could say. And or 110 to 175. That's the range that we're in right now, and it's the same range that Solana was in basically mostly all of 2024. Just continually hit what was this? 120, 175, 120, 170, 180, 120, or sorry, 115, 180. So yeah, 115, 180, 115, 180, 120, 180, 113, 180. So that's the range we're in right now, and that's what I would be playing, and what I'd be looking for. And then if it happens to fall underneath that range and, you know, goes down to the 80s, then I think that's when you switch from, you know, trading to investing, and you could just buy and, you know, hold, and then eventually wait. And if it's still fundamentally sound, and if nothing, you know, changes behind the scenes, then technically it should go back up, which is what happens, you know, with all different types of assets. And I look, yeah. What other charts do you want?
Let's just make fun of Ethereum real quick. Just go to.
Oh my God.
Iceberg is in the chat. He says ETH is wrecked. LMAO, they're flipping. Yeah, it's going to flip from 2 to 3 to 4 to 0.
Yeah. I mean, shit. Look at the fucking ETH BTC chart right here. Just absolute train wreck. Worst.
It's going to turn around for sure.
It'll turn around. It'll turn around. I promise. What was the? Let's see. Where is it right now, and where has it been? So this is at the same price right now that it was at in 2023, 2022. Yeah, this is like literally 20. So actually, I just saw something, a whale that bought over $1 million worth of Ethereum back in 2022, I think. He finally capitulated. He sold it for like $100,000 gain, like after holding it for like 4 years or 3 years. And that is not what people are in crypto for, you know, to get a 10% gain in 3 years, right? So yeah, Ethereum still absolute trash. There's going to be there's better plays out there. And I mean, it looked good a couple days ago. Like if you zoom into the daily time frame, you can see, you know, this was looking good because the same exact thing with the other chart, how it was just like slamming down and then like a little bit and slamming down, and then finally it started to turn around a little bit. It looked okay, but now we're in this resistance. You know, it bounced off this support a bunch of times and then it fell underneath of it. So now, just like before, the support turns into resistance, and it's going to have some trouble, you know, breaking back above 2100. So it's not the best time to buy now. If you want to buy it, you know, a good place is like 1950 ish, because you could just buy it down here, then put your stop under the lows, and that would be it. But it's going to depend on, you know, what Bitcoin does, and yeah, we just gotta wait to see what Bitcoin does. But like I said, there's many other plays out there that are
cooked.
Cooked. Yeah,
it's cooked.
Everything's cooked. Yeah.
James, is Ethereum making a comeback?
There's always a possibility, but the probability is low. I mean, I was impressed today. I mean, like last week, I was doing some research, and one of the things I was researching was stable coin volume and which network does the most amount of stable coin transaction volume, right? And I got to give it to ETH. ETH does more stable coin volume than any other chain combined. So there's that, right? But is that going to be enough to keep it going? I don't know. That's just one thing. But ETH is the 800-pound gorilla when it comes to stablecoin.
Yeah, I think.
Go ahead,
I think they really fumbled when they went from proof of work to proof of stake, because with proof of work they had they had the big basically the big narrative going for them that, hey, we are actually a decentralized protocol that has some like physical security to it, at least as far as that goes. And when they switched, they basically went into direct competition with all the other protocols, which put them out there and gave a lot of attack surface to the competition. So I think, and you even see it in chart if you go to the date on CoinGecko or some other charting platform, you'll see it started going down against Bitcoin basically from that date. And that's pretty obvious in my opinion.
Yeah, we're looking. I by the way, I just switched this to my speakers. Let me know if you guys are getting feedback because my headphones are messing up. If I don't know if does it sound weird or anything, chat. Let me know. But yeah, just getting these headphones are messing up. Sounds good. Okay, Roger. Yeah. So looking at that, just tying it in, and Lou, I know you're like probably the most dialed into crypto Twitter other than I am. I don't know why, but just looking at the Kaito right now, Kaito AI has Ethereum has been at the top of the dominance for 24 hours, and I also believe 48 hours, and not 7 days, but looks like something's been going on in ETH lately. It is at the top of mindshare when it's typically Bitcoin. So I think people are there is more chatter, in my opinion. There is more chatter of Ethereum being and I'm seeing more and more people kind of like giving up on Ethereum, and I mean, I just have no faith in Vitalik Buterin personally. It's just a complete joke. So, people in the chat are saying, is Solana staying in that range direct result manipulation? If we knew, we wouldn't be here. We'd be on Whore Island. We wouldn't be here. We don't like you guys that much. But if we knew, that's the thing about manipulation. You don't know. I will add this though. So one of the people I think who is a really good account to follow is a guy called Marty Party Music, and he's been tracking the Solana reserves via Binance, and Binance has now been massively accumulating. Here, I'll just show you some real quick. So this is the chart of Binance and their SOL positions. And as you can see here, in just from September, basically into the election and then into the Trump pump right around here, Solana Binance has been decreasing their Solana position and their amount of Solana that they have, and recently now they just started reaccumulating. So you just got to ask yourself, what are these crypto exchanges up to? They want to make money end of the day, and you're not buying assets as the most powerful and largest cryptocurrency exchange in the world to lose money. So this is something to be paying attention to. That's why on-chain analysis is so important for you. You really actually want to be part of the side of crypto, the minority in crypto that's actually making profit, not just handing it over. So let's Elias, you have an update for us regarding what's going on with the mining side of things. You've been away for quite some time. Welcome back.
Yep. So I'll share my screen real quick.
And guys, real quick, by the way, before we get going, I've made some adjustments. So due to my research of YouTube here, apparently the channel is being penalized because we do not have members. So I made a really, really cheap option for you to join. If you enjoy this content and you can spare $3 a month, hit that join button. And if you are a member for 24 months, you will get a Bitcoin logo next to your name. You can click that join and we'll shout you out here during the episode. That is just going to help get the word out. If you appreciate what we do, and you appreciate the message that we're putting out here in the channel and all the guidance we're giving you, if you want to be a member, go ahead, click that join button below this video. Click the link in the chat right now. Billy's going to put it up, and you will be able to join us and support us here on the channel. This will help us get boosted in the algorithm. Just get this information out there. Elias, here you go. Thank you so much.
Okay, so basically I wanted to start with this as we basically see bigger inflows from institutions in the cycle. I think the mining side is getting less and less important for the actual Bitcoin price. It's still pretty interesting from an investing perspective. So I'll just put this in a bit more, but keep it short in general. And what we can see here is that the average mining cost or electricity cost per mined Bitcoin is still around 88K. So miners are mining with a loss right now. And if we see this chart since January, we basically see that the mining cost is the blue line up here, and the orange line is the Bitcoin price. So it's been pretty low profits since at least January. And in the end of February, with the dip, most miners have switched into loss mode, but are still running their machines. And I've put together a short chart for a longer time frame. Just ignore the blue line. This is just
what's the cost of producing one Bitcoin right now, Elias?
About 88K on the global average.
Wow.
Yep.
Okay.
Oh, wow.
Okay. And big mining companies are actually investing heavily into infrastructure improvements right now, which will even have a positive effect on the wider industry, in my opinion, long term. And I've put together this chart. Ignore the blue line. It's just about the orange line, which is the Bitcoin price, and the red line, which is the average production cost per Bitcoin. And this also shows you since May 2023 how short or how small the margins for Bitcoin miners globally have been. So they've basically tracked Bitcoin price more or less than Bitcoin had run up. And this is where we see the halving, where the production price doubled in April 2024. And since then, they've been operating at a loss, at least at the global average, till around October 2024, when Bitcoin had the next run up. And then they've been in profit till February now. And big parts of the industry just keep their equipment running in a loss because they think Bitcoin prices will go up soon. And the next one is, this is basically the public service announcement from someone from the industry. You can ignore the black line. It's just about the colored lines. This is the average price per terahash, which is the unit calculating the actual mining power you get when you buy publicly listed mining companies. And so if you want to buy any mining stock on the stock market, basically, make sure to check if they did any infrastructure improvements over the last year, and make sure to calculate their average price per terahash, because there's some mining companies you see here where you pay $300 or more per terahash, and others where you only pay around $50 per terahash. And you have to check the actual efficiency. This is all public data. They have to, or they publish this most likely on a quarterly basis, and is also available via the stockbrokers info options. And basically make sure you check how much you actually pay, because there's a lot of companies that have really good marketing. They are all over the bigger platforms and paying for ads, and you buy their stock and it looks great on paper, but in the end you've paid 5x to 10x what it's actually worth. So this is just something to point out here. And apart from this, I'd switch to the long-term Bitcoin chart. This is just something regarding the RSI, which is basically an indicator that might tell you if a market or an asset is oversold or overbought. And I just want to reiterate here that from my perspective, nothing has changed. I still think that the top is most likely, or will most likely, be in October of this year. And we can also see this in the RSI that would be corresponding with this, which is now even below 70. And usually if we look at the tops, so this one right here, this one right here, and right here, even before the all-time high of the cycle, we've seen the RSI on Bitcoin go well over 80, and we haven't seen anything like that till now. So the max we had was something like 76, 77, and we are pretty oversold, at least in Bitcoin terms right now. So this is just my long-term perspective on this. And on the indicators that show basically an all-time high or show danger in the bull market, I also don't see anything that looks bad. Basically, one we have, and I'll increase the size here for those viewing on the phone. One is basically those lines here, those two gray lines, which is the pi cycle top indicator, and there's still enough space between the pi cycle top indicator. It triggers as soon as those lines cross. And if we zoom out a bit, we can see that it's still has a lot of space compared to other bull markets where we got near the top.
Wow. That's huge.
So this is basically one reason why I think that we aren't near the top yet, and which also, in my opinion, just from the where it's pointing at, also is pointing at the September, October area. And the other indicator that gives a warning was just a line, the blue line here, from the price level that just goes horizontally from the price level of the last all-time high to the right, and the 200 EMA here. And this is on the monthly chart. And this was actually pointed out by Luis on his Twitter account. So I incorporated it here, made it a bit more aggressive so that we get an early warning. And the warning is actually when the EMA crosses through this line that goes from the all-time high, so from the all-time high of the cycle before, horizontally through to the right. And we got a 3-month early warning in 2017 right here, and with the same methodology we got, at least for the second top of the double top in 2021, we got an early warning around 1 month to 1.5 months before the all-time high in 2021. And right now, if we look at the line from the last all-time high going horizontally to the right, and the 200 EMA coming up right here, we also have enough distance between that to basically be sure that we still have time till the next all-time high, if this methodology proves to be correct one more time. So those are those two big ones. And apart from this, we still have the timing of the cycles, which is, in my opinion, much more reliable if it happens again than the actual prices and indicators. And there we've seen the basically 2015 to 2017 3-year bull market, 1,065 days. Then we have the same thing from 2018 to 2021, so the next green area here, with 1,066 days. And if we assume, because we always have those 4-year cycles in Bitcoin so far, which is programmed in with the halvings in Bitcoin right into the protocol, if we assume that the same thing will happen again with the 1,066 or 1,065 day run-ups and the 365-day bear markets in between, this would put us right at October 2025. So just one more indication, in my opinion. And the conservative price estimate that I'm calculating with, or that we are calculating with in our mining project, is around 170K. I think it might well go over this price. This chart pretty much hasn't changed in the last 6 to 8 months. But this is what we are calculating with, just to make sure we don't go bankrupt, basically.
That's north of $3 trillion of market cap.
Yep.
Pretty much double where we are now.
What? Yep. Hey, Elias, how are the mining companies' balance sheet? Are they hoarding Bitcoin or are they selling it as of now?
They are hoarding, like massive.
Interesting, right?
Wow,
interesting.
Really?
And
really, majority of all these, so the majority of these mining companies, they are mining the Bitcoin and holding on to it.
Yeah, they're trying to do basically copy the MicroStrategy play right now, and they've also done this traditionally. So, for example, Marathon Mining has a few thousand BTC, I think, and they're mining them, and if they, depending on how much they want to invest or how much funding they get from VCs or from emitting their stocks on the stock market, they'll just keep the BTC they mined and wait till prices go higher, because they have enough buffer to pay any costs they might have.
So they're expecting the price to go up, right? Because they're not selling it now. Yep. If they think it's the peak price now, they'll be liquidating Bitcoin.
Yeah. What you could do right now, as a miner, if you have Bitcoin lying around, because you don't have a lot of cash flow right now because the electricity price is high, and you're not making a lot of margin on your mining operation, is you just take the hoarded Bitcoin you had and you put it up as collateral and get
they're borrowing against it. Okay.
Yep.
Okay. Yep.
And then
Okay.
you use the US dollars or whatever you got, and you build out and improve your energy infrastructure with it.
Yep.
Or buy even more hash rate and wait for Bitcoin to go up, basically. So your margin goes up again, you get a lot of cash flow, and then you hoard Bitcoin again, and you try to basically sell at the conservative top. And
yeah, they're kind of doing just like you said, what MicroStrategy is doing. They're getting the fiat in exchange for Bitcoin, just like they're doing.
Yep. And in the US, it's extremely tax efficient too.
Yeah.
You can just roll over your loans more or less.
Good stuff. Real quick, shout out to Mitch, who just signed up to be a member. Shout out to Stifler's dad, who signed up to be a member. And OG Sama shout out to you. Guys, there's two levels. There's the hot dude recruit and the beginner support squad. I think the beginner support squad is like 99 cents. And then the recruit one is like $2.99. So yeah, if you guys can sign up again, it does help us with the channel. We're trying to get back in the algorithm, kind of get this promoted again and getting the channel boosted and up and going to the next level. Anything else, Elias?
Yeah, I had one more thing, and I think
we'll
see this. We'll see this more and more, which will be people on social media, especially on crypto Twitter.
Do you need the chart up, or do you need your screen up, or just want to talk?
Yeah, the chart is fine. It's okay. Basically, I think we'll see a lot of people pushing the narrative that we'll see an all-time high in 2026, even though it makes no sense from a timing perspective.
Yes.
And and they are doing this because they want to use either they really think it will happen in 2026, or they are just regurgitating some other posts they've seen because they don't do any research themselves, or they want to use those people that read those posts as exit liquidity. So they want to dump on you because they want to sell before you sell, so they actually get a higher price. And exchanges are pushing this bullshit too. We've seen it in the last cycles. They'll say, oh yeah, next year, whatever, and then they actually dump on you. So why I have this chart up is actually for James. Also to confirm this. So down here, this is the purchasing managers index, which is basically pretty low, and the RSI on the S&P 500. And just what I see here and here in this downtrend on the RSI, and this is my personal opinion, basically asking James if he can go into detail or has any more info on it. This is since 2009. What I see here is basically that we've topped out on the S&P 500. I want to see this going up again.
Yeah, so it looks like, because RSI is a momentum indicator, right? So what they're saying is that overall momentum is slowing, but it's like going from 120 miles per hour to 60 miles per hour. Your momentum has slowed, but you're still going up in the speed, right? You're giving it less gas, but still giving the gas, So I think it's going to continue to go up, but not as fast as what we've seen historically.
Yep. Because this is the only thing I'd say why Bitcoin might still pump into 2026 with an all-time high in 2026. If all the tariff stuff with Trump's basically gave us a market pause and we see positive news in 2026, I think we might get an all-time high there. But as long as I don't see the S&P going up again, making new all-time highs, at least personally, I'd stay away from anything that says all-time high in 2026 for Bitcoin.
I'm already starting to see, idiot influencers. Lewis, what are your thoughts on that? I personally think anybody calling for an elongated cycle in 26 is an idiot.
We've had the 4-year cycle since the start of Bitcoin. So I'm, Q4 2025. That should be it. And like it depends. Like that's time based. That's
if
definitely
Ethereum goes to 10K, then I'll believe it. Then we'll
Yeah.
probably go into 2026.
Yeah. I'm gonna be looking at the charts. I mean, technically, honestly, from the chart perspective, there's a lot of things that I would say the top is already in, to be honest. But like, obviously, like that's not my thought right now because of the time. And so my time is Q4 2025. That's been since 2022, I think, or 2021 or whatever, since the bear market of last cycle, right? That's when it's supposed to be. So that's when I'm going to be really looking to just like exit my positions. And then you look for confluence. So you look for the prices going up. You look for all the things that happen at tops. Like, the basically a lot of the stuff that happened already, like the president launching a meme coin. But yeah, if that stuff if you could combine that stuff with new users, like the most new users signing up, the most liquidity coming into the system, then after since a long time, and and euphoria everywhere, like massive euphoria, and everyone thinking they're a genius, and all of this like typical stuff, and you combine that, and it aligns with where the timing should be, then it's like you have everything lined up to be like you should sell, like follow your plan, follow the game plan at that time. If something happens and it looks like or the timing of it is there, but the price action is not telling you that it's time to sell at all, because like nothing's happening, or like literally like it just is boring, or it's down, then you'll have to think about it at that point, because in my opinion, price action tells everything. Price action is more important, but like when you could get the fundamental stuff aligning with the technical stuff, that's when, like, the reason why I like working with you so much is because I think you're really good at the fundamental stuff. I do the technicals, I'm on the charts, and like I've seen it so many times when you call something fundamentally and I see it in the charts, it works out so well. So look for those, what we call confluence, or just all those things coming together, and that's how you could be a really good trader, investor, whatever you want to call it, whatever you want, make a lot of money.
Yeah, it's there's a lot to be. I mean, crypto is just like, trying to be really good at crypto is like trying to solve a Rubik's cube that's fighting back, and
that's constantly moving.
Dude, it is a living, breathing organism. Like for example, the meme coin mania has pretty much died off. The darling meme coin of 2024 was WIF, peaking out nearly $5, and I think now it's like 40 something cents. So
I saw something. Do you think? Sorry, but I saw something today about meme coins. This guy, he was saying a lot of people in crypto. I don't know if I necessarily agree with him on this, but like it brings up a point to think about. He said a lot of people in crypto get so caught up marrying their bags because they make so much money in a particular sector that they think that it'll like just come back, and they end up holding their bags or like trading down to zero instead of moving on to the next thing, which like in crypto is typically a good idea to do. And he was saying how there's so many people that are still caught up in the meme coin craze, especially because they made so much money with it, that they want to keep on going into it, or keep on buying it and buying it, or like holding on, like hoping for another incredible rally. And like for me, when it comes to meme coins, I I almost do think that they will, see another rally sometime in the future. I don't know when, just because, I mean, this cycle, they were the biggest gainers. Last cycle, Dogecoin and some meme coins, what was it? The Shiba Inu, they were, the meme coins were the biggest gainers. So meme coins do have this like continuity of every single cycle. They end up being the biggest gainers. So I don't know about that, but like it did bring up a good point. Like you just basically you have to be fluid in this ever-changing market, and you have to adapt and not bag hold in terms of marrying your bags, like not marry anything and be so dogmatic that's like this is it. And so I don't know. When you were mentioning meme coins, it just made me think of that, and now I'm like wondering, I wonder. But I think looking at the charts, looking at the data, like you say on-chain data, and you could, if you pay enough attention, if you're locked in enough, you get like these little glimpses of like where the money could be flowing to and stuff. So it's being adaptable and being able to read the charts and read the data and being objective in that and going towards where you think the money is going to go to is more important than just saying like, oh, I'm going to marry this bag or I'm going to marry this narrative because I did well in it before, something like that.
Man, yeah, there's a lot. I mean, there's a lot to unpack. So we're gonna take a shift of the show now, switch over to James, and we're gonna talk about. I'll ask you, good to go, buddy?
Yeah,
Elias?
I can do it.
Elias, are you good?
Yeah. I just I don't want to stretch it, but one really small thing regarding what Luis just said is like, especially for those people coming from the stock market, like casually investing there, long-term investing, if they come to crypto, they often don't understand that's a completely different game, because when you come from the stock market, you're used to invest in companies that you might like. So you marry a bag, and that bag is companies that are generating cash flow. When you come into crypto, there's Bitcoin, and the rest is basically a zero-sum game that can maybe be compared to GameStop stock. So this is you're
great point.
actually gambling. There are coins and protocols that do have a small cash flow, but it's completely out of proportion if you compare it to stocks. So it's basically gambling. It's like high risk options trading, something like that.
Yeah, there's no real cash flow. There's no real sorry about that. Buybacks, like happen in the stock market. No real case for things happening.
Juan Correa in chat, $10 super chat says, what are the team's thought in SEC dropping its case against Ripple and it getting a futures contract? Also, what could be a catalyst for ADA's price to soar, ETFs, futures? James, you want to talk that?
Okay, the Ripple, right?
Great looking
So
chart.
Ripple had this 4-year-long case from SEC saying that they were a security, they were unregistered, and they're not allowed to sell this, yada, 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 right? So now the political environment has changed, right? And the regime has changed, at SEC and FCC and, whatever. Now they're saying that they definitely ruled that Bitcoin is not security. So that's already been taken care of, right? So now we're kind of going into the gray area of the other crypto, especially the layer ones with the staking reward, right? ICO and staking reward. Is it security? Is it commodity? Is it something else? Now they're saying where they're kind of leaning in the political regime is that the meme coin, and especially with just no staking and purely whatever, are more treated. They want to more treat like a baseball cards, right? So it's just collectible. You get it, then you buy it like a baseball card, and if it goes up, you sell it, and you pay the taxes on it, whatever, right? But now the gray area is basically pretty much the layer ones. When you had the ICO, then early investor jumped in, right? Then there were staking rewards, almost like a dividend or payout. So now, but what I'm seeing here with the XRP is that they're not out of the woods yet, but their chance of totally getting barred from doing anything has been taken care of, right? Now they're just kind of in the limbo saying, okay, what are we going to get classified as? You know, they're out of the danger, but they're not out of the woods yet, right? So which is good news for Ripple. And there were talks of Ripple ETF as well as, Solana and Cardano and whatnot. So I think we're moving in the right direction, but it's just something to keep an eye on. But if you have not, I don't own any Ripple, but Ripple does look interesting as of now, right? The huge downside risk have been taken care of. So now it becomes a little bit more interesting play, especially with the ETF and rumors of the banking industry kind of embracing it. So who knows, right, guys?
Yeah, definitely. There's a lot of speculation because the people that do control Ripple, they do control the majority of the supply. The case was dropped this morning. So it did spike up, had a little bit of a spike, nothing too crazy. It went from 232. Looks like it peaked out around 256, and now we're at 248. So if you just made some allocations knowing with the slew of cases being dismissed these last couple of weeks, thinking that, you're going to make a little profit, you did. And don't forget to take profit on that one. But yeah, just looking at the overall climate, the thing is that a lot of people don't realize is the Biden administration was single-handedly the reason why the last bull market stopped in 2021.
Hey, is it just me or is the audio lagging?
It's you. But anyways, that being said, they were sending Wells notices to people, which is basically they sent up Wells notices to a bunch of AI companies and a bunch of crypto companies saying, hey, you're currently under investigation and you may be potentially guilty for a crime. And a lot of these companies just started shutting down and not, producing any more of their crypto services. And you had, the largest, most powerful government and economy in the world being throttled by the past Biden administration. Now we do not have that. This administration is one thing and one thing only, is focused on getting people money, cutting taxes, cutting government waste, and it's going to take some time. It's not like going to happen overnight because, we weren't put in the situation overnight. But I do think for the first time ever in history, we have a pro crypto government, which is good. You don't have, because when you have the government after you, when you have like lawsuits and stuff, it just drains you. It's just such a terrible thing. Oh, excuse me.
Yeah, especially for the whole industry, it's just kind of put a damper on the whole industry, where other countries are moving forward and your government is actively, hindering the industry.
Yes. Yeah. So we're going to talk about real quick. We're going to just talk about the Federal Reserve. So the Federal Reserve put out their statement today. It was released at 2 p.m. and they have decided to they're going to maintain the rates. Now, here's the thing. We're going to tell you, we actually predicted this. So long story short, I'm just going to read the first two paragraphs. Recent indicators suggest that economic activity has continued to expand at a solid pace. The unemployment rate has stabilized at low levels in recent months, and labor market conditions remain solid. This is bullshit. Inflation remains somewhat elevated. The committee seeks to achieve maximum employment and an inflation rate of 2% over the longer run. Steve couldn't be here. He has to handle some projects with the research firm he's working at right now. So this 2% inflation target is never going to happen, in my opinion. Uncertainty around the economic outlook has increased. The committee is attentive to the risk to both sides of the dual mandate. And the dual mandate is employment and inflation, right? That they got to keep both those under control. In support of its goals, the committee has decided to maintain the target range for the federal funds rate at 4.24 to 4.5% interest rate. So we already knew that, though. Again, so if you're watching this for the first time and what you can do is you can just go to a website called polymarket.com, and you can actually trace what's going to happen. It's actually become a pretty wildly, eerily accurate indicator. The Fed decision March, like I said, it was just, they knew since January 27th, there's going to be no change. And the probability just grew. What has really raised my eyebrows lately was the May 7th one. Recently, it went from potentially, this was back here during March 11th, we were potentially going to see a 52% chance of a 25 basis point decrease. But now, as you can see here, looks like we're going to have no change in May as well. And then June was also looking like they were going to have a change. Now it's kind of looking, it's maybe June, because at the beginning of the year, they did say, what did they say, James? They said they were going to do 2 cuts, was it?
Yeah. They said we might get 2 cuts at the most.
Yeah. But nobody makes money in high interest rate environment. And the problem is, though, when you lower the interest rates, that tends to increase inflation a little bit. So,
well, let's kind of go back to the statement, right?
Yeah.
One thing I think you left out on the Fed statement is that they said, here, let me find it. They said they approved the plans to slow the reduction of their $6.8 trillion balance sheet asset, right?
Yes.
So they have two major mechanisms that they can use to control the liquidity. One is obviously Fed funds rate. The other one is the open market committee using the balance sheet. So what they did, they had these trillions and trillions of dollars of asset that's sitting on their books, mostly from 2008, 2009, right? And what they've been doing to increase the liquidity is to buy these assets from the companies, investment funds, pension funds, banks. So you give them cash and you buy these assets from them, right? Then to lower the liquidity or reduce the liquidity, you sell these assets back to these companies and take the cash out of the market. Does it make sense, guys? Right?
Yep.
So now they're saying that, hey, we've been selling these assets to reduce our balance sheet, therefore taking the liquidity out of the market. But now they're saying, oh, no, we're going to slow it. So we're not going to pull as much liquidity out of the market as we've been doing. So it's actually I wouldn't say it's a good news, but it's a news in the right direction, saying that, hey, the liquidity level, we're going to try to kind of maintain it instead of try to bring it down even lower.
Yeah, and then that's what you're mentioning is actually right here. I did leave that out. It is this sentence where it is saying, beginning in April, the committee will slow the pace of decline of its security holdings by reducing the monthly. James, you're going to have to translate this for everybody. Okay. Beginning in April, the committee will slow the pace of decline of its security holding by reducing the monthly redemption cap on Treasury securities from 25 billion to 5 billion. The committee will maintain the monthly redemption cap on agency debt and agency mortgage-backed securities at 35 billion. The committee is strongly committed to supporting maximum employment and returning to its 2% objective. Now, is this indicating that quantitative tightening is coming to an end soon?
They're slowing the quantitative tightening. I don't know if it's going to end, but you're kind of seeing it. We're kind of seeing it across the board overseas that a lot of countries are already in quantitative easing phase, not even tightening phase, right? So let me kind of share my screen and kind of jump into the liquidity section, okay?
So, and then I'll tell you guys, so quantitative tightening, guys, is when they're not spending money, and quantitative easing is when they are spending money. So the two things you want to be looking for this market to turn around is you want the United States government and the Federal Reserve to begin quantitative easing, and you want interest rates to come down. When those two things come down, we're going to start seeing some movement in the markets. James, is that correct or incorrect?
Yes, sir. And you want dollar to weaken because of it.
Yeah, and you could track the strength of the dollar. If you go to Trading View, it's the DXY. We have been tracking that behind the scenes as well, because when DXY, the dollar index, when X starts to go down, oh Jesus Christ, I haven't checked this in a day. Have you seen this lately? Holy shit!
It's been going down.
Oh, that's wild. Yeah. Maybe that's why the price is kind of going up right now, because that's a big motherfucking drop. Holy cow. We went down from 107 down to 103. And then, like I said, going back here, you see, this is in, wait, no, give me 1 second. I'm going to go back to 2021. So yeah, see, this is during, well, it was actually going up during 21. This is like when the beginning of the end was starting with the bull market here. But yeah, you can see during these times where we had the price dropping, prices of this during this time in January 2022, a lot of fucking alts were ripping, even though the bull market was over. If you guys remember things like Tomb Finance, even Ethereum was ripping during this time, and then Ethereum had its rally here as well in 22 when it went back up to like the 3K range before, cooking itself. So you want to be looking for quantitative easing to start, interest rates to go down, and you want the DXY, the dollar, to be going down. That's the trifecta right there. If you have those three things, we're going to be making some money.
Yeah, because that allows market, that forces market to go risk on, right? And crypto and equities are risk on asset, and treasury and bonds are risk off asset. Yeah. So you're kind of we're kind of going back and forth, right? And now I think we're kind of moving from risk off to risk on.
Yep.
You want me to go on the liquidity side?
Yep. Right where you are, brother. I'm trying to find the updated liquidity chart, but you have that on your end, right?
Yeah. Okay. Let me share my screen here. Entire screen. Okay, here you go. Here's something, if you guys been following the news. First news, big news, German government, they just got rid of their debt ceiling. And they said, we're going to print €1 trillion and spend it on defense and infrastructure.
Actually, they are only allowed to spend it on defense and infrastructure.
Yep. But remember, that would trickle down, right? That will go through the economy and trickle down, and the money will eventually get into people's hands. Crazy, right? Okay, my next. So again, Europe is already in quantitative easing. They're done with tightening last year. They're hurting, so they said, hey, we need to stimulate the economy. So here it is. We're going to spend €1 trillion. That's just Germany. Let me show the next one. Share screen. Let's do the one. Where's that? There it is.
Here we go.
It's from BBC. Chinese government are spending 41 billion on top of additional money, right? They're saying that they're going to pay for the childcare, they're going to increase wages and give people more vacation to revive the slowing economy.
Yep.
So China is doing quantitative easing.
Yep. Is this in addition to the 178 billion they printed the other day?
Yeah. They're going to pump more. Because look at the consumer spending, look at consumer confidence in China. It's been just tanking, right?
Yeah.
And look at consumer spending.
Yeah.
What China is faced now is that Chinese economy, remember, it's a centrally planned economy. It's managed by CCP, not by the market, right? Yeah. So what's been keeping Chinese economy going was two things: government spending and real estate. Yeah. Real estate has been pretty much done and over with for about a year because they have, according to 3 houses per person in China. So it's way overinflated. People are not buying. Now Chinese citizens are not buying anymore. They're like, this is bullshit, right?
Yep.
And the government now has to spend, but now they're kind of catching on, saying that what we need is strong consumer-based economy, and our consumer-based economy is lagging behind all the major world countries here. You see it? By about 50%. So they're now saying that, hey, we got to get money into people's hands so we can boost up the consumer-based economy. That's what he's saying. Here, billions to get open with their wallet. So they're going to give people money.
Yep. And then on top of that too, because a lot of, there's a lot of people out there who bought in, myself included, a couple years ago, I bought into the China is the future thing, but that was a gigantic, phenomenal marketing campaign by them. Because if you actually look in, anybody now who's telling you the Chinese economy is the future is a fucking moron. That is not the case whatsoever. And China's employment rate right now, unemployment rate, do you know what it is, James?
I think it's close to 50% for age under 40.
This is just the youth unemployment right here. 21%. Old people don't spend money.
That's an official number. Remember, that's official number. That's not even real number, right?
Yeah, exactly. When you hear Chinese official number, you know it's full of shit. But yeah, anybody out there who's telling you the China is the future and Chinese economy is the future is uneducated, to say the very least about that person. But taking a look here too, James, I don't know if you knew this, but in 2023, or excuse me, right around 2024, they stopped letting out the age. China withheld unemployment data by age starting with July. So
yeah, and they stopped publishing local government debt level too. So that's huge, because I heard that's like insane, through the roof. So, and on top of that, now they're going to print more. They're like, there's no way out of this until we're going to have to just print ourselves out, print our way out of this whole downward spiral, right? So,
and it's not going to work, because if you check the average age, so we're speaking about the consumption.
Oh yeah, their population is so old, just like Japan and Korea, John.
Yep.
Their aging population, nobody's having kids.
Isn't Germany an aging population too? Elias, you're German, right?
It's completely fucked. So basically, it's in Germany, it's not as bad as China, but in China, it was the median age was 18 in the 70s, and now
it's probably like 60.
No, we hit 40, but people, and we are down to 0.25 kids per.
That's even lower than Korea, 0.6. 0.25.
And we're speaking about official data here. And adding to this, the US still looks good, but also the current administration, they fired a few people that have been responsible for collecting and putting together the employment data and some other important market data from official data from the government. So they're like fired right now, will probably be back at their job in a few months, but this is also adding uncertainty to the market.
Dude, cooked, bro, cooked. So like the only way out of this, like and this has been going on since like the 80s. We have to print our way out of every crisis, right?
Yeah. Remember, we kind of go back to that whole presentation we did about a year ago, why this is all happening with a 4-year cycle of money printing, Bitcoin having that it's all related, right? It's about everybody's focused on the GDP growth to service the debt, and there's no way to service the debt when you're not having kids and your productivity has been kind of stagnant. So they're betting on the AI and robotics to bump up the productivity, right? And meanwhile, nobody's having kids, so they have to print that to service the debt, right? So it's kind of on a downward spiral. It's like you taking out a new credit card to make a payment on your old credit card.
Yeah, and this has been going on. Go ahead, Elias.
I just wanted to say there's only one country right now that can actually try this and be successful with it for a few decades, which is the US. Which actually has a stable population and US dollar. And for
India, probably.
Yep. maybe, but they're also getting older. But what I wanted to say is for Germany, for most countries in Europe, and for China, there is no way out. This is just kicking the can down the road, and basically,
and the can is getting bigger and bigger every kick.
Dude, it's unreal.
Yep. Here's another data point that we'd like to share.
I want to show something real because I don't know if you guys remember, but sorry, this is a little pixelated, but it is pertaining to what we are just talking about regarding the global liquidity. So if you remember the beginning, it's okay. You can still share in the back end, and I'll have you queued up. When we started the show, this little black line here was here at the bottom. As you can see, global liquidity is now starting to rise, and
there it is.
This is where we're starting to go up. And when liquidity come up, so liquidity means money. Money's going to come into the economy through the governments and through their printing, and then it's going to raise the value of assets. Stock markets, that's why Extra Guac was just in the chat, and he said that if you could take a look right now, Chinese stocks have been going up like crazy, but it's all fake. It's all fugazi. It's not real.
It's a rising tide raises all boats, right?
Yeah. And here you go, James. You wanted to share that?
So another data point is that the centralized crypto exchanges have been gearing up for expansion and IPO, right? So Gemini hires a new CFO, and they reportedly eyeing the IPO.
And how about what happened with Citadel?
Huh? What?
Citadel's new...
Oh, yeah. They're jumping in as market maker, right? And as well as Kraken preparing for IPO. Being in the traditional finance and private equity, you don't IPO during bear market, right? You want to IPO in bull market when liquidity in the market is high because you get a favorable valuation. That means more money for the executives and the venture capital investors that jumped in earlier, right? So this means that these exchanges know that there is still more room to run.
There is plenty. I mean, I think like I said, if you just look at the on-chain data too, Binance is accumulating Solana, and a lot of these people, they are buying the dip massively too, because looking at the whole situation right now, it is like, I think the problem, well, one of the many problems with crypto Twitter is is like people think very illogically. They think that we're just going to go exponentially up no matter what. And it just doesn't work like that. And when we had last year, when if you guys remember the beginning of the show, Lewis had the Solana chart and he was showing that it was consolidating. We consolidated last year from April, May, June, July, August, and then September is when we started moving. So we've consolidated for basically from the all-time high, which was March 14th last year. We consolidated for 6 months. 6 months of just going sideways. And when you see a chart going sideways for that long time, it's going to break up or it's going to break down. It's like, it's like pulling back. It's like coiling a spring. You're just building pressure, and it's either going to shoot up or it's going to shoot down. So when we see sideways action, and then the 4-year cycle is showing us that we are indeed in a bull run based upon just the timing of everything, we're inevitably going to go up. And then when you start seeing that consolidation happening in 2026, you're going to see crash down, consolidate, crash down, consolidate, crash down. So it's pretty easy and predictable if you know what we're talking about here.
So like just looking at this right here, right? So just kind of tying it all together, what we've been talking about for the last hour and a half, right, guys? So this is a total crypto market cap, monthly chart, as you can see, global liquidity at the bottom, and your dollar strength.
That blue line is global liquidity. This is a phenomenal chart setup.
So now you see global liquidity has been kind of going down or being in the sideways, but now, and you see the trend line here, downward trend, we broke through last September. then now we're kind of breaking through again, right? We're kind of now the trend is ending. The downward trend of global liquidity has been ending, and John just showed you that on that, the long-term, really long-term chart, annual, the cyclical chart, right? And now you see the dollar strength. The green dollar strength is the long-term effect, and red is short-term. What you want to see is the green going on the top, going below the red, breaking through, which means dollar is getting weaker in the short term, right? And now you see the whole crypto market cap here. We've been actually in the long-term uptrend since maybe fall of 2023, right?
And that is when the news leaked for the ETFs were getting approved.
Yep. Then we had the peak year in March. Then we consolidated, like John said. Then we had the Trump effect. Then now we're consolidating again, as you guys see. But if you read William O'Neill, trading guy from way back when, what we're developing here is a huge cup with a handle. Do you guys see that?
Yeah.
Here's the cup, and here's the handle. I mean, you're talking about a cup that's been building for 3 years.
Yeah.
And the up move that's going to come from this will be significant.
Yeah.
And we're kind of almost towards the end of the phase, right, guys? All the things are kind of coming together. We got the cup with the handle formation. Then we got liquidity, global liquidity kicking in, and everybody's starting to print, except for Grandpa Powell. He's resisting, but he's going to have to cave, right? Then, because of that, dollar is weakening. We got, you talked about all the catalysts, right, John? I mean, you're looking at all these macro catalysts that's coming together. Not only that, we got the crypto industry insiders, such as Citadel, Kraken, Gemini, and they're all gearing up to get a piece of action, right? And now we got most crypto-friendly administration that's putting out more policies and guidance that's favorable to crypto industry. And I don't know how can people be bearish at this point.
That green line is the DXY, right? The DXY at the bottom.
Yeah, yep. Green is the long term. Red is short term. So it was kind of strong, and now it's getting weaker.
I'm looking at 2022 when I predicted back then on the Tokyo Crypto Show season 1, where I predicted that they were going to raise rates every single month, and they did because of all that COVID printing. So starting right there from 2022, marked on the chart at the bottom, all the way, towards the almost towards 2023. That was just the strength of the dollar was continuing to go up, and that caused so much global economic instability. I mean, the yen started crashing, the won started crashing, the baht started crashing. I mean, the euro started crashing. Everything was starting. I mean, when the dollar gains in strength, everybody loses, because it just makes everything more expensive for everybody to deal in dollar cents. So these currencies had to devalue in order to stay competitive. And Japan's, their central bank has been doing that. They finally raised the rates here in Japan, I think 0.25%, and that caused a lot of trouble with the carry trade being unwound as well. So I think, like everybody's been saying, the thing is when we, because I'm as you can see here, I'm recovering bear MLD. I was just watching everything bleed out consistently since January, and I was just like, yeah, probably getting into cash is not a bad thing right now. I did think that maybe that was the top, but now that the market's, there's just a lot more stability coming to the market. Stability is good when I say we're having consolidation, because that is indicating that we are most likely going to consolidate and then break towards upside. Also, a lot of these, and then James, you can tell me because you've been in TradFi for 20 plus years. TradFi, they like to pump the markets pretty much end of year, right? They don't like to pump it too early, if I'm correct.
They like to pump it in the spring and the fall, right? There's an old saying, selling May, go away, because summertime, a lot of TradFi guys tend to take a lot of time off, go to their lake houses, or, if you're into the alternative lifestyle, go to the Greek island,
The Hamptons.
You know, Mykonos, if you're into that sort of stuff, right? But but yeah, I mean, just again, kind of going back to what you're saying, John, going to cash wasn't wrong move based on your trading plan. If you're trading a swing or short-term trading, going to cash wasn't the correct move, right? What would be the wrong move is to start seeing the market bottoming out and start seeing all these catalysts and price action moving up, just like Lou said, and still looking for nugget information. But like Lou said, the price action contains everything, known and unknown, right? And so where you're going to have to kind of pivot and restart accumulating and start getting into your trading position, you don't, and you just kind of hold on to the whole bear sentiment idea while market's turning. That's the wrong move, not going to cash.
Yeah. You know, and then looking, like I said, we're going to continue to be producing more and more content here. And this week I will be launching the crypto community after watching everything and confirming we are not heading into a bear market. We will be launching a crypto community this week, and then we'll be amping up the crypto minute shows as well here to kind of give you guys a more frequent touch point, because like, to be honest, I mean, week to week is just, dude, we talked last week. Dude, I felt like the last time we talked was like 2 weeks ago. I'm getting gray hairs. I'm getting gray hairs from this market on the side. I've never had this much stress in my life.
That's what it does before the big move, though. They want to shake as many people out as possible, because people that can shake it out would jump in towards the second half of the big move, because they're going to have to keep kicking huge FOMO, right? So by shaking it out, it's providing all the exit liquidity towards the back end.
Yep, and for this, especially because you mentioned crypto Twitter a few sentences ago, it's so important to have a community or somewhere to ask and check in and check for the macro stuff, just to make sure you don't get washed away by emotions on crypto Twitter. Because being in a company that mostly does retail sales in crypto, what I see is that if news, so basically sales go down since February, like minus 90%, something like that, of retail, because everyone was depressed because their meme coins went down. And then literally not more than 24 hours before the FOMC meeting, people started buying again. So the time horizon people have to make their decisions is something in all the garbage that pops up on crypto Twitter, and then they buy. That's it. The time horizon is like 24 hours, maybe 2 days max. And this is retail. And this will happen as soon as prices rise again and we're getting nearer the top in this market. It will happen, and the emotions will be even harder than right now. So having a community and following people like Luis, who is probably like preparing since 4 years to make this one tweet like, hey guys, the top is in again. Stuff like this is so important, because if you follow all the garbage on Twitter, you're guys just having a bad time.
God, I hate crypto Twitter. I fucking hate those people. I fucking hate them, dude.
You see the same guy doing, 2 weeks we're gonna pump, 2 weeks we're gonna pump, 2 weeks we're gonna pump. The bear market's here. Then you're like, it's gonna keep going up, keep going down, keep going down. It's pretty funny.
And they get the most.
There's a lot of bad information out there.
And they get the most likes. The perma bulls, just like always bullish no matter what, and just like jumping on the narratives and just bull posting even on the way down. They get the most love for some, or the most likes and the most followers and everything like that, because people want to hear, it's going up and they're making money. But like, reality is a lot different than what people are saying, what the popular people, say on there. I try to give it to people straight, but you gotta just do what makes you money in this game, not just listen to idiots that have no idea what they're talking about, but sound good because they say price goes up, money goes up, and buy the dip, and then buy the next dip, and the next dip, and the next dip, But yeah, that's why you got to have people who know what they're talking about, and you should also know what, to everyone at home too, and like just have a basic understanding of what you're investing into and everything, or otherwise you're probably just gonna get rinsed.
Yeah, mega cooked, mega cooked. I think also that with everything we're seeing right now, it is such, I think this market, I feel like this market has been, I don't know, I want to say if it's the most volatile, but it is more volatile than we expected. One final thing, James, when we talk about global liquidity coming in, and there is a gap between global liquidity coming into the market and then an actual rise in traditional.
So about 2 to 3 month lag, right, guys?
Do you have a chart indicating that to show you guys at home? But yeah, so the money comes in. It's not instantaneous, guys. It's just like going to the gym. You're not going to get jacked overnight. You're not going to be making, instant kind of money overnight. It takes time for these things to accumulate and to see, these are lagging. These are leading indicators. So when you see global liquidity going up, you're going to see a price as a lagging indicator. So global liquidity going up is a leading indicator, and then price is a lagging indicator. So looking at, just like I said, pure data is super important. Another thing is this: tomorrow, big news for President Donald Trump. While James gets that chart ready, Donald Trump tomorrow, he will be speaking at the Digital Asset Summit in New York. This is the first time a sitting president has ever addressed a crypto conference. So that is that. Also, just so you guys just to get everybody on board, in May, there is the Bitcoin 2025 conference. And when you join the community that we will be launching here, it's going to be called the Crypto Chad Community. And when you join the Crypto Chat community, we will be organizing a trip for all of us to go together to Las Vegas, Nevada. And we will be going and attending and networking at Bitcoin 2025. So if you want to join us, we will be planning a private trip. This will be no additional costs. You'll just need to pay for your ticket to get in, and then your room and board and everything in Las Vegas, Nevada. And we will be traveling together, and we will be strategically going to the right parties. The conferences and stuff are, if you want to go to the conferences, it's fine. But you make the money with the degens, and the degens are at the after parties and all the crazy stuff. So we are going to strategically have to go and party and network with people. A lot of people who got it on the Trump token, they attended the crypto ball before President Trump was inaugurated in January. So if you would have gone there, you would have gotten in on one of the most volatile and successful meme coins of all time, quite frankly. Going back to James in the chart here. Go ahead, James.
Yeah. Okay. So like here, you see the peak of liquidity here was December, and market peak was what?
Right?
Yep, April. So 2-3 months.
Yeah.
Same thing. The peak here was May, June, and October.
And that's
so again, beginning of October, end of October, 3 months, right? This local peak here was December. Peak last year was what? March. Look at that, huh? This peak here was September. When was our peak? December, January.
Yep.
Same thing with the bottoms, right? Kind of expect same way. So we just bottomed out here, probably, I would say, again, art, not science, February. So we'll probably have a few more weeks of sideways action, right? And chart says that here, right? We're at the bottom of the channel, but we still got another month or two of chop. Probably. Nothing is certain, right, guys?
Yeah.
So maybe choppy through rest of the March, some halfway through April, then we might start seeing the move probably, 2nd of April, beginning of May. So we still got time. If you want to accumulate, you can start, accumulating your positions. If you went to cash, if you're still holding onto your bag, just be patient.
Yeah, man. So that's pretty much. Let's check the ETF inflows. We've got the numbers in from Fidelity and IBIT. No, the data is not in yet, so we're still sitting tight. But we had a pretty big day. Looking at Bitcoin, I think we started the day at like 81, 2. Let me see. We started the day. Yeah, we started the day at about 83,000, and we peaked at 87.5, give or take. So that's a big amount of percentage gain for a single day. That, in my opinion, is indicative of a yeah, let me give you the exact number. So the low for the day was 82,750 and the high was 87,443. That being said, I mean, you know, that in my opinion is an indicator that we had a big day with ETF inflows. We'll find out tomorrow when the numbers are finally in, but this is a much needed sigh of relief because a lot of people, I knew some people that personally freaking out, losing their mind, saying we're gonna go to 74,000. But you know, you know where we are. We're rising. We're holding steady. But the thing you guys want to, in closing, here's remember the things you want to take away from today's episode. Number one, we are looking for the biggest indicators, quantitative easing. Number two, we want to see interest rates cut. Interest rates will be cut this year at least 2 times. And then number three, we want to see the dollar index go down. Keep an eye on this. And then the key number you got to be waiting for and looking for is, does Bitcoin break above 91,000, as Lewis was saying? When we break above 91,000 and stay in that range, that's where we're going to see potentially to the next leg up. Thank you guys so much for being with us here today. Does anybody want to say anything closing? Did I miss anything? And yes, John K., the rates are going to go down. They are.
Yeah, I thought it was cool that we noticed that the ETF inflows for the first time became positive, what, like 2 days ago or something like that? Yes, and then 3 days ago, and then yesterday they were good, and now today. So that was like another leading indicator potentially of that. And so if you could put things together like the ETF inflows and then maybe funding rates and maybe a few other things, that could probably be a pretty good, I guess, like indicator or way to know whether we're going to go up or down, or have a good estimation of whether we're going to go up or down, because really it does require liquidity. So if we get good ETF inflows, that's a great sign. And if we see huge outflows like what we saw at the top of the market when things started going down and they kept on going down and down and down, that's a good indicator to maybe, be more risk off or take some profits off the table or something like that. I just think it's a really good indicator to keep note of. And so I'm keeping note of it every single day. I watch it, and I know you do too. Every day you're looking, what are the inflows and what are the outflows? And you combine that with a whole bunch of other things, you could get a really good system, I think.
Yeah. And then
one thing I like to add is that another potential catalyst that we're looking at is Trump and the current administration want to eliminate income tax for anybody making $150,000 or less. I mean, talk about liquidity catalyst here, right? That puts directly money into people's pocket. I mean, they're already talking about no income tax on the overtime and tips, which is pretty big, right? Then he said, Trump publicly stated, and his Secretary of Treasury stated, we don't want income tax for anybody making below 150,000. Phenomenal liquidity.
Amazing.
Yeah, that would be a massive catalyst as well, because we need some tax cuts. I'm hoping we get, maybe we're going to get that Doge dividend by the end of the year for $5,000. That would be great too. Because
Woo!
We need that money.
If we get that, oh my God, because that's like the COVID stimulus.
Yeah, COVID relief. Yep, that's right.
Except it's even more. That would probably pump the markets crazy.
Good stuff, man. Good stuff. All right, guys. Well, listen, that's going to do it us here today. We'll be back on my channel tomorrow, 9 p.m. Eastern Standard Time, as usual. If you're watching on the replay and you want to join the community, please leave a comment showing that you are indeed interested in the crypto community. All the data you give us only helps us purify the message for you to make more money in this market, because statistically speaking, without guidance and relying on yourself, you are probably going to lose money. There's like a 99% chance you're going to lose money. That's an actual literal statistic. You are on your own as a beginner. You have a 99% chance to lose money. The odds are not in your favor. But if you're with us and a team of experts, we will help you. We will guide you. This is going to be some Telegram chat where we just neglect everything. We'll be doing briefings for the community after every Crypto Minute episode as well, fielding your questions and tailoring our answers to your exact portfolios. So stick around. We are going to make money 2025. It's going to be a great year, and we're going to be organizing the trip to Bitcoin 2025 as well. That being said, we will see you guys next week. See you later.